Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me are Sonia Shenoy and Pavitra Pari. Good morning, girls. Things are picking up a bit as we speak, led by the rally in the banking space. So the Nifty is now up close to about 50-odd points. The Sensex has surged 200 points, led by a strong up move in the banking space. The Nifty banking index is up 200 points, up 0.5%. Once again, it's the PSU banks which are leading from the front. And just take a look at the up moves that you're seeing in some of the banking names. So Punjab and Sindh Bank up 10% today for the month so far. In the month of December, Punjab and Sindh Bank is up 96%. This stock has doubled. UCO Bank up 8% today. For the month so far, it's up 32%. Indian Bank, 6.5% rally so far today. So PSU banks continue to remain on fire. They were trading at a significant discount to their private sector banks, and some of that is getting corrected. The advanced decline ratio is also currently in favor of the gaining side. Pretty strong, actually. 2 stocks in the green for 1 in the red. Hi, girls.
Hi, Reema. Hi, Pavitra. And I think the writing was on the wall, right? In the morning, you saw good cues coming in on the macro front, whether it's inflation coming off. There's, of course, the FI selling has reduced substantially. There was almost 1,000 crores selling earlier. Now it's barely 100 crores. And then you have these 2 big events coming up, which is the US CPI data as well as the Fed meeting. So all eyes will be on that. But locally, things have definitely improved. Just remember that the Nifty is still in this broad range of 18,400 to 18,800 and is now at the lower end of the range. So maybe there's more headroom for this market to move up. But so many stocks to talk about today.
Oh, absolutely. So I think like Reema was pointing out, it's largely in the banks today. In fact, the banking index in itself is up around 11% this month. But, you know, apart from that, a lot of the auto stocks are also doing very well. Tata Motors, of course, the top gainer. We'll talk more about that in a bit. But also take a look at Hero, M&M. All of these are, doing quite well. On the downside, it is all pharma. In fact, for the month also, this has been the top losing sector. So take a look at some of the pharma names. But there are so many cues lined up. We have the US CPI data today. Then you have the FOMC decision tomorrow. So all of this could very quickly change, and we'll see how the market moves for the rest of the week as well. But for now, let's kickstart the show by talking about the top gainer on the Nifty. Like I said, that's Tata Motors. It's up almost 2% in the back of its divestment plans. Remember, the auto majors board has given its initial approval for partial stake sale in Tata Tech. Sonia, tell us more about this. Then, of course, we'll get to Reema on Tata Tech as well.
Okay, so it's very interesting, right? As you said, Tata Motors, the board has now approved that partial divestment in Tata Technologies through the IPO route. Now, Tata Technologies is the product and engineering and digital services firm, and Tata Motors holds a little over 72% stake in Tata Technologies as of March. Now, the fundamentals of Tata Technologies are very strong, and of course, Reema will get to that. But the listing of Tata Technologies is something that Tata Motors and the group has been planning for a while. This is also on the back of increasing demand that we're seeing in the electric vehicle space, in the aviation segment as well. As per Tata Motors' annual report of FY22, the investment in Tata Technologies is about 220 odd crores. And this is important because it's the first IPO by the Tata Group entity in the last 18 years. The last one was TCS way back in 2004. So would be very interesting. Now, I reached out to a few analysts to find out what the implications would be for Tata Motors. This is at best sentiment positive for Tata Motors. They value Tata Technologies at 20 times PE on the back of the FY21 earnings. And if you apply a 20% holding company discount, this can lead to an upside of around 31 rupees per share to the fair value of Tata Motors. So not a very big upside, but a sentiment positive is what we're seeing. But it's also interesting because, this is, of course, a new age business, you'd want to call it. And now it's coming out with the IPO. After 18 years, you're seeing an IPO of the group. So it's going to, get a lot of mind space, I guess.
Pretty monumental, right? And, Tata Tech was, as you pointed out, it's the IT services arm for the Tata Motors group, right? Tata Motors and now JLR. So I guess that was the genesis, right? Provide technology to the Tata Motors, the automotive business, etc. So since then, we've seen Tata Technology also cater to other clients. So historically, I'm guessing, predominantly most of its revenues would come in from Tata Motors. But now if you look at the way the captive accounts contribution, the captive accounts at Tata Motors Limited as well as JLR, the captive account contribution has been coming down. In FY20, the captive accounts, would contribute, in FY20 would contribute 54%, and that's come down to 36%. So maybe that has resulted in the IPO because now there are so many other clients of Tata Technology. It's not just a Tata Motors, a JLR, solar type of company. About the revenues, FY22 revenues at 3,500 crore rupees. The profits are at 437 crore rupees. FY22 revenue growth was the strongest ever at 46%. Cash in the books, $165 million. Even in the first half of the year, the revenues are close to 1,900 crore rupees with a profit of 176 rupees. The company has more than 9,300 employees as per its annual report of FY22. It's headquartered in Pune, but they've got 5 offices located in Mumbai, Lucknow, Jamshedpur, Bangalore, 1 branch office located in Japan, which enables it to provide cost-effective services to its offshore clients as well. And this would be the 3rd IT company under the Tata Group. TCS, of course, is their crown jewel. That TCS's FY22 revenues were closer to 2 lakh crore rupees, but Tata Tech's revenues are actually more than Tata Elxsi as well, which is the other listed entity. And Tata Elxsi, we know, commands very strong valuations as well. So it'll be interesting to see this other IT company from the Tata Group.
Oh, absolutely. And like you said, an IPO coming from this group after so long. So
18 years.
18 years. So it'll be interesting to see how this fares. But with that, let's now move on and get some corporate conversations going. I'm going to invite our first guest on the show now. GMM Pfaudler, the glass line equipment maker, is set to acquire Mixel France SAS in a deal worth over 60 crore rupees. The company's Chief Executive Officer, Aseem Joshi, joins us now to speak more about the latest acquisition, as well as the company's business outlook going forward. Aseem, good morning. Thank you very much for joining us. This is Pavitra. So, if you could take us first just through the deal a little bit, how do you think it will really enhance things for you from here?
Good morning, Pavitra. Thanks for having me on the show. Yeah, it's an exciting time to be at GMM Pfaudler. We have been a company that's grown very well in recent times. Historically, we've been known as a glass line equipment manufacturer serving the chemical and pharmaceutical industries. That's an area that we've been, historically been very strong in. But in recent times, we've expanded our portfolio of offerings to broaden it to offer products that are relevant to our customers. So we have a portfolio in filtration and drying, mixing, sealing, etc. Now, this latest acquisition of Mixel in France, which we just announced last week, actually expands our offerings in 2 ways. One is there's a new range of products that we can bring to our customers, but also it diversifies our customer base beyond just chemical and pharma, because Mixel actually has expertise in serving the environment industries, biogas, and a few others. So it's exciting. We're really looking forward to enhancing our offerings to our customers. And keep in mind, Mixel has a strong presence in Europe and also in China, and these are areas that we currently do not cover with our mixing portfolio. So exciting times, as I said.
Okay, exciting times. Is there any part of this acquisition that will be funded by raising debt? And if yes, what would the debt on the books be?
No, this is all through internal accruals. We're not doing any fresh debt. Currently our debt to EBITDA ratio is about 1. So we feel very comfortable that we can service our debt
Okay.
Got
that. So no debt on the books, and you won't be raising more debt. But any more such acquisitions that you're looking at, and if yes, any kind of war chest that you have created perhaps over the next 1 to 2 years that you'd be deploying towards acquisitions?
Well, it's been a busy year for us from an acquisition standpoint. Before Mixel, there were 2 other bolt-on. There was 1 acquisition and 1 JV that we announced a couple of months back. The one bolt-on was for Hydro Air Research in Milan, Italy, which is a specialist in membrane separation, essentially filtration technologies. And then also a joint venture in the US, in Georgia, with a company called JDS, which really expands our ability to serve our customers in the southern part of the US with parts, and especially with meeting faster service expectations from them. We've also done 1 other major acquisition, which is of the Pfaudler Group. We sort of completed that process this year. So it's been a busy year. We're now focused on making sure the integrations happen correctly. At the same time, over the past few years, GMM Pfaudler has successfully acquired a number of companies. And so we continue to look at more options. But right now, our focus will be on integration. There might be 1 or 2 more that we do, but integration will be a focus.
So with the revenues that accrue from the acquisitions that you've made and plus the synergies, will you beat the FY25 guidance that you have given us? I think of revenues of 3,700 crore and an EBITDA of 630 crore by FY25. Will you do better? And if yes, what could be the extent of upward revision?
Yeah, so when we gave that guidance for FY25, that was about 3 months back, if I recall, that reflected a 14% CAGR on revenue and a 24% CAGR on EBITDA. Certainly times have changed since then. We feel very good about meeting that guidance. Right now, the way we view it is that we'll continue working towards that guidance, and once we meet that milestone, we will refresh it. But for now, that's the guidance we're going to stick to.
All right, you're sticking to that FY25 guidance. Aseem, you were just mentioning that, with Mixel coming in, you will get exposure to non-chemical, non-pharma kind of segments as well. Can you tell us how much that is likely to contribute to your business, and also the non-glass business? How much is it at right now?
Yeah, so regarding the second question on non-glass, so of our consolidated revenues, there's about 70% that comes off of our glass line business, which is both OE as well as service. So that leaves about 30% roughly that comes from non-glass, and that's been growing pretty quickly in the last couple of years. Mixel, as I said, will enhance that portfolio further and crucially give us exposure to other industries. We don't have a specific breakout to share right now, but suffice to say that we do expect this to grow faster than the rest of the business.
So the other industries that you're getting an exposure to, can you tell us a little bit about that, and where would your growth avenues be? Maybe not now, but a couple of years down the line.
Sure. So the thing about mixing is that it is a technology that has applications really in a very wide swath of industries. So mixing is required, of course, in chemical and pharma, which we are very good at, but also in things like oil and gas, pulp and paper, food and beverage, and also water, biogas, really a very wide range of industries. Now with Mixel, they have expertise in, as I said, the environmental solutions area, which is essentially water, both fresh as well as wastewater, and also biogas, right? And this is just to name a couple of the top ones that come to mind. That is an area, water is of course an important macro trend, I think, for the world and certainly for India. And we think we can bring some innovative solutions from our expanded portfolio now to customers, both here in India as well as internationally.
Okay, just one final question. I think last time we spoke to you, you did mention that, you will be taking some price hikes. Can you tell us if you've put into place any more price hikes?
Yeah, when I think the last time we talked was we were in a highly inflationary environment, especially around commodities, and those have been passed on. I think that thankfully the commodity price hike seems to be behind us. And so we feel, we're at a reasonable level where our cost increases have been passed on where possible. So no more actions currently, but, we watch the commodities and other costs very carefully.
Thank you very much for joining in, and all the very best for the next year as well. Look forward to chatting in 2023. That's GMM Pfaudler for you, saying that now the focus of the company is integrating the acquisitions that they've done, making it work for themselves. They're not planning to raise any debt to fund this acquisition, and they are confident about meeting their FY25 targets of, I think 3,700 crore of top line and 630 crore of an EBITDA. Once they achieve those milestones, they will look to refresh their FY25 guidance. Get into a break. Up next, we'll discuss what's buzzing in the commodity space. Manisha Gupta joins in as always.
Okay, so for now, the market is holding up quite well actually. It's 65 points higher on the index, and a couple of stocks that I wanted to mention. Britannia has hit a fresh high today, although it may look like it's absolutely flat, but this is a fresh high. And the market cap of Britannia has now crossed 1 lakh crore. So it is a big move that Britannia has seen in the last many days. And something like a Polycab is also a stock that has done very well. And today it's up 5%, sitting at a fresh high, and big volumes there too. But let's get a handle on what's happening in the world of commodities. Manisha Gupta joins in. And today the focus is on crude. Manisha, over to you.
Sonia, thank you for that. Well, yes, we did see 3% of a gain overnight for the crude oil prices. It's trading in the positive right now as well, and this is after 10% of a decline that we saw in the previous week. The support comes in from supply disruptions, Chinese economy opening up, and the fact that the Canada Keystone pipeline is shut for a second straight day. This is a pipeline that brings crude oil to refiners in US, and it does a volume of around 0.6 million barrels per day on a daily basis. So this is what is adding premium to the prices right now. The other thing clearly has been about about Russia still talking about reiterating after the price cap that has been put from the G7 there. Russia said that they might cut production going forward if G7 does not roll this back. So that those uncertainties also have been supportive. And then the markets are also looking at the Chinese demand, which did come back in the month of November, and December loadings as well have been on the positive side there. It clearly is going to be about the US inflation numbers today and the US Fed meeting tomorrow and day after that the street will keep an eye on in sense of announcement. Further direction would come in from that. But take a look at what the price forecasts have been coming in for 2023. The most bearish one clearly coming in from Citibank, which says that there are possibilities of recession going forward in the next year, and that will keep the prices lower. Their average pricing for Brent is $65 per barrel on the higher side. You have EIA and Fitch talking about around $92 to $95 per barrel, and Wood Mackenzie talks about 95 as an average for the next year. Everybody else is talking about 3 digits coming back in case of the Brent prices. So whether it's Enverus Intelligence, Bank of America, Goldman Sachs, Morgan Stanley are all talking about $100 to $110 per barrel coming back. This is because of the supply disruptions and Chinese demand, which they expect would come back in the next year.
Manish.
All right, Manisha, thanks a lot for getting us all of that action from the crude oil space. For the markets, it is an up day, so let's get into a break now. But when we come back, we're going to discuss the market technicals. We'll have Mitesh Thakkar joining in. We'll also bring you some of his top trading bets.
देश का हर अरमान पूरा करे एक नाम श्री राम लाना ले जाना बेचना खरीदना कमाना बचाना सलाह पाना गुंटूर जोधपुर तिरुपुर एड्डूर गोवा पटना दिल्ली हावड़ा श्री राम के साथ आगे बढ़ना श्री राम फाइनेंस लिमिटेड आपकी प्रगति का साथी।
इस सुपरफास्ट जमाने में कार इंश्योरेंस क्लेम का स्ट्रेस क्यों? एक्को ऐप पे क्लेम सेटलमेंट सुपरफास्ट होता है।
Get super fast claim settlement. Acko, welcome change.
Sula Vineyards Limited. Initial public offering of 2,69,530 equity shares of face value of ₹2 each through the book building process, with a price band of ₹340 to ₹357 per equity share. Bid offer opens on Monday, December 12, 2022. Closes on Wednesday, December 14, 2022. For risk factors and more details, please refer to the RHP available on the websites of SEBI, the book running lead managers, and the stock exchanges.
लड़की होने का मतलब ये नहीं कि बंदिशों से दोस्ती कर लो। कामयाबी हौसला देखती है, जेंडर नहीं। इसलिए लाइफ तुम्हारी, रूल्स भी तुम्हारे।
सिग्नेचर ग्लोबल आपके इसी अंदाज को सल्यूट करता है। इंडिपेंडेंट फ्लोर्स फॉर द इंडिपेंडेंट यू।
मैं हूं मिस्टर बी, एक नहीं दो नहीं तीन नहीं काम कर सकूं 4 भी। So show me what you can do, bro. नाम है मेरा Mr. Can Be Done। क्या तुमने पूछा what I can do? 1 क्या 10 क्या 100 क्या bro? I can do a whole lot more. Bank account से लेकर business loan, FDRD, edu loan, UPI तक। Mobile major shopping faster get line, bro. You are in luck. कैसे bro? How? This is Canara Bank AI1।
आपके सपने हमारे अपने।
इससे शादी कर लो। अब तो मैं रिटायर होने वाला हूँ। उसके बाद तो टाइम ही टाइम होगा।
पर रिटायरमेंट के बाद लाइफ इतनी इजी थोड़ी होगी।
रिटायरमेंट के बाद भी सैलरी मिलेगी।
HDFC लाइफ एन्युटी प्लान्स दे लाइफ लॉन्ग इनकम ताकि रिटायरमेंट के बाद भी लाइफ पहले जैसी ही रहे। HDFC लाइफ, सर उठा के जियो।
कंस्ट्रक्शन बहुत तगड़ा है।
क्या भाई साहब, जो साइट विजिट ना दिखाए 99 एकर्स बताए। घर लेना हो या बेचना, एक्सपर्ट से ही पूछना। 99acres.com।
Landmark Cars Limited. a leading premium automotive retail business in India with dealerships for Mercedes-Benz, Honda, Jeep, Volkswagen and Renault, and a commercial vehicle dealership for Ashok Leyland, launches an initial public offering of equity shares of face value of ₹5 each in a price band of ₹481 to ₹506 per equity share. Bid offer opens on Tuesday, December 13th, 2022 and closes on Thursday, December 15th, 2022. For risk factors and more details, please refer to the RHP available on the websites of SEBI, the book running lead managers and the stock exchanges.
Welcome back. You're still tuned into Trading Hour. We're seeing a 75-point gain on the Nifty right now, so things looking quite good. We are at the high point of the day, and a lot of this strength really coming through from the banking pack. So that index in itself is up, over 0.5% right now. Once again, led by the PSU banks. So let's get Mitesh in to get us a technical check. Mitesh, good morning. And yes, we have a good day, but this is ahead of some really big cues in global markets. Would you take a call on the index today?
Good morning. So I think
we have lost Mitesh, so we are going to try to get that connection back. In the meantime, let's look at some of the stocks which are doing really well from the banking pack and the larger names. It is really Indices and Axis which are leading, so those stocks holding up quite well. You have the Bajaj twins also which are doing very well. In fact, Bajaj Finance is the top gainer on the Nifty right now. It's seeing a gain of over 2%. And like I was pointing out, it is a lot of the auto stocks also which are doing well. So whether it's an M&M, you have Tata Motors, of course, which is right up there. So all of those doing well. And tech also seems to have made quite a comeback today. Of course, HCL Tech saw a big cut last week and then yesterday as well. But today that one is doing quite well, 1.3% higher on HCL Tech. You have TCS, Infosys, Tech Mahindra, all of these also doing quite well. But looks like Mitesh is back with us. Mitesh, I hope you can hear me now. And, if you can take us through your call on the market at an index level and then, of course, your fresh trading bets as well.
So on the index, I've been advocating that getting past 18,610 would add to the strength, and then we should see another 100 to 120 point kind of a up move happening. So in that sense, I think the setup is turning mildly positive. The good part of correction seems to be over, and now I think the client should be buying opportunities with 18,450, 18,430 acting as a very strong support. On the stock side, I have two buy calls. MCX has broken out very nicely. That's a buy with a stop at 1610 for targets of 1700. And the other one on the radar is Bharat Forge. Disclaimer, we have some call option positions over here. That's a buy with a stop at 868 for targets of 910.
Okay, thank you very much for that. Get into a break. On the other side, we'll discuss some buzzing stocks, so stay tuned. Welcome back. IT is making a comeback. Just pull up Nifty IT. That's up at the high point of the day, a gain of close to about 0.7%. The Nifty IT index has been falling for 7 straight days in a row. In the last 7 days, the Nifty IT index has seen a fall of close to about 6 to 7%. There you can see the fall started sometime in the beginning of December. And after 7 days of a fall today, you are seeing a rebound in the IT names. So HCL Tech has rallied quite a bit. TCS, Infosys, these are stocks which are rebounding after the recent cuts. So watch out for the IT names. Paytm is the other one which is on our radar. The board will meet today to consider a share buyback. Abhishek is here with the details, the street expectations. Abhishek?
Well, Rima, as you mentioned, Paytm will hold a board meet today to consider potential buyback. Now, the company may not use the IPO proceeds for the same. So, just as per SEBI rules, the maximum buyback under the open offer method is around 2,035 crores. And under the tender offer, the maximum buyback can be about 3,310 crores. To show the calculation, the fresh issue during the IPO was about 8,300 crores. Cash and equivalent in the balance sheet as of Q2 was around 9,182 crores. So a brokerage note did carry that 69% of the IPO amount is actually still with the company. So that's about 5,600 crores. So if you net that from the 9,182 crores, you are left with a balance of more than 3,580 crores. So as per SEBI rule, the maximum buyback under the open offer or tender can be about 3,300 crores. So there is no need of using the IPO proceeds to consider the buyback that they are planning in the board meet today. Back to you.
All right, Abhishek, thanks a lot for getting us all of those details on Paytm. The stock today is up in trade, but don't lose sight of the fact that for the month, it's still seen around a 16% fall. With that, let's shift focus to the mutual fund world for a bit. Vivek is standing by with all of the action from the space for the month of November. Vivek?
Well, that's right. So what we've actually done is we've collated the data across, what is the mutual fund activity for the month gone by, November 2022. So this data, we've also got help from Nuvama Alternative and Quantitative Research. So first up, let's have a look at what were the key additions as far as the large cap space is concerned, as far as the mutual funds are concerned. So HDFC Bank, HUL, Bajaj Finance, Asian Paints as well as Nestle India were the large cap additions. On the other hand, the reductions or the trimming of positions across most of the mutual funds were seen in ICICI Bank, LIC, Wipro, Grasim as well as Varun Beverages. Coming to the mid cap space, anything between 10,000 to 40,000 crore in terms of market capitalization would be, categorized as a mid cap. The key additions there by mutual funds were Balkrishna Industries, Astral, Alchem Labs, Star Health, Tata Communication, and some of the trimming of positions or deletions were Aurobindo Pharma, Oracle FinServ, Linde India, Aarti Industries, as well as Thermax. Now, coming to the small cap space, anything below 10,000 crore market capitalization would be categorized as a small cap. Tejas Networks, Balaji Amines, Finolex Industries, GNFC and Science saw the largest additions. On the other hand, GE Shipping, Eris Life Sciences, Rights, MedPlus Health and Lemon Tree were the ones that saw trimming of positions. Now, two key highlights or some interesting trends that were seen is that, most of the mutual funds actively participated in IPOs that actually came out in the month of November. In fact, the participation was extremely high. So all of the IPOs, to name a few, Global Health, Arkan Chem, Bikaji Foods, all of them saw active and healthy participations in the, from the mutual fund space. On the other hand, very interestingly, the MSCI-led rally in some of the larger names actually saw mutual funds trimming their positions. So names like Indian Hotel, Tube Investments and ABB India that were entrants in the MSCI November Index Review saw help mutual funds actually trim their positions in these names.
Okay, thanks a lot for that, Vivek. Very helpful data there. Let's slip into a quick break. On the other side of the break, we'll discuss the way forward for the market with Vinod Karki of ICICI Securities. Do stay tuned in. Welcome back to Trading Hour. So, Dalmia Bharat yesterday announced a deal with JP Associates to purchase cement, clinker and power plants from JP Associates for over 5,600 crores. But the stock right now is under pressure. It's down 2.5%. Nigel is here to give us details on why the street is a bit concerned about this deal. Nigel, over to you.
Well, that's right. Dalmia Bharat, they've gone ahead and they've got JP Group's cement assets. So that's a good deal, right? But will it go through in its entirety? That's the question. And because of that, the street has seemed to be a little bit skittish on that front. Let's put out 6 big concerns with regard to why the stock could be under pressure. First up, why did the big daddies not bid for this unit if it's such a good deal? That's Ultratech Cement as well as ACC and Ambuja, which are currently housed by the Adani Group. So that's point number one. The street is wondering, why they're curious about it. Why didn't that happen? Point number two, these units, they are acquired facilities. Well, they haven't been functioning at high capacity utilization levels. So will there be an additional capex that will have to be spent? If yes, what could the quantum be out there? So that's the second concern. Point number 3 is they've acquired close to around 6.7 million tons of clinker. Now, out of that 6.7 million tons, 2.3 million tons, that's the Dala Super Clinker unit in Uttar Pradesh. I understand it's not got all the clearances. There's a question mark out there. And also it's locked in an arbitration with Ultratech Cement. So that could be in a spot of bother because you're talking about 2.3 million tons of clinker that has a question mark out of the 6.7 that they've acquired. More than 30% out there. That's concern number 3. Point number 4 is, there's a Bilai JP Cement unit. That's a JV between the JP Group and SAIL in the ratio of 74% to 76 to 24%. So will SAIL bargain hard to sell their remaining 24%? That's another question mark. And will all the approvals come through? Remember, this unit, it houses 1.1 million tons of clinker and 2.2 million tons of grinding capacity. Point number 5 is there is clarity awaited. Is the limestone sufficient? And what about the land availability? If they want to scale up this unit, that's another a question mark out there. And finally, the deal has got through between the JP Group as well as Dalmia. Are the lenders on board as well? So approval from them will be crucial. Put all these factors together, yes, the street is saying it's a good deal, but they want answers to these 6 points broadly. So on the back of that, the stock is under some pressure.
Okay, thank you very much for that. Vinod Karki, the head of strategy research at ICICI Securities, is also with us to talk about the market fundamentals. Vinod, thank you very much for joining in. I want to start off with your recent note that you published on 6th of December, where you are saying equities have now reached high optimism zone. And typically, when Indian equities trade at valuations which we are currently trading at 20, 22 times forward multiple, we see poor returns in the future. Can you talk a little bit more about what you anticipate playing out? And will it be different this time? Because history doesn't always repeat.
Yeah, thanks, Rima. Yeah, that's absolutely right. History necessarily doesn't repeat all the time. But if you look at the past 20 years, 1 year forward returns, when we reach area of valuation exceeding 20x, we have seen low single-digit expected returns overall. But if you split it up, there is also a chance of negative returns, 34% probability that there could be negative returns. But if you look at the positive return, the average has been around 9%. And we have been very bullish on the overall investment credit cycle and the overall domestic demand. So from that perspective, I think we may land up in the positive zone in terms of 1 year returns. But nevertheless, this return will be subpar. So if you even take the historical average 9% return that the market has given from this kind of range, then it is below the expected return that investors ask when they invest in equities, taking the risk. They at least ask for 12, 13% kind of compounding. Now, if you land up with single-digit returns, it is not up to the mark, basically. And if you go beyond 20x, the earnings yield dip below 5%, whereas bonds are yielding more than 7% right now. So relatively, also the asset class, becomes less attractive overall. Yeah. But all said and done, it seems that we will land up in the positive territory in terms of returns, but subpar returns compared to expected returns.
All right, positive territory, but subpar. Mr. Karki, good morning and thanks a lot for joining us. This is Pavitra. You've also mentioned in your note that earnings growth, will not be too bad and we will see expansion continue as far as earnings grow. Can you tell us what is the kind of earnings growth you're penciling in for next year, for FY24?
Yeah, so when we came up very strongly from the post-COVID low base, especially supported by financials and commodities, out of that, financials is continuing, both in terms of top-line demand and the margins. But commodities have given way. I mean, you have seen how commodity earnings have been impacted, also because of taxes also. But financials continue. And what is going to help in the next year, what we are observing right now, is that the price shock, the input price shock that we saw after the Ukraine war, I think that is abating. Globally, if you see, commodity prices have been falling. The cost of logistics is falling. So I think that will have a positive impact on margins for manufacturers. We are seeing that commentary also come from the PMI internal commentary, that manufacturers are seeing lower input cost pressures right up till November. And this will continue, it seems. Whereas the domestic demand seems to be quite robust. So this combination of robust domestic demand and input cost pressure easing for manufacturers may help earnings trajectory. And financials are doing pretty well and they form a large part of the weight. However, commodities and global related, where global demand is under question, those areas might see some muted demand overall.
I was also going through your note and looking at your top picks, whether it's in the consumption space or overall, there is one theme that stands out, which is the housing theme. So, whether it's Century Plyboard, something like a Green Panel, Brigade Enterprises, you like a lot of these real estate and the ancillary spaces. Do you think that there is still a lot of upside here? And within that gamut, would you stick to names like, say, Brigade, the Lodhas of the world, or would you get into, ceramics, tiles, the green panels?
Yeah, so first of all, real estate is coming out of a decade, almost a decade of stagnation. And historically, we have seen that, these trends do change post a decade or so. And over the last year or so, we have seen this absorption of real estate in urban areas really pick up across the board, across the country, basically. And it has also resulted in uptick in prices. So investors or users both get a little excited when they see an uptick in prices of any asset class. And real estate is no exception. So I think the demand for real estate will continue despite the slight increase. I mean, not slight, I mean, quite a bit of increase in interest rates. But what really drives any asset class demand is the uptick in the asset prices. So that's picking up. So we think we are in for a cycle where real estate demand is picking up. And typically these cycles don't fizzle out in a year or so. So our view is that this real estate cycle will continue, and it forms a large chunk of the gross fixed capital formation, which will help the investment rate also. And therefore, all these ancillary companies, and where you have a lot of faith in the company's governance and the quality of management and the ability to manage the balance sheet, which is of prime importance for real estate, I think one can bet, because these cycles don't fizzle out in a year or so, as I said. They can continue for several years.
You're also of the opinion that companies tied to global demand are likely to have a weak growth outlook. Now, usually stock prices run ahead of fundamentals, right? The stock price is correct and then the bad news follows. Can you talk about IT? Because we've already seen a substantial correction. The Nifty IT index is down 25-30% so far this year. Do you think in terms of price damage, at least, the worst is behind us?
Absolutely. You hit it on the nail. I mean, it's perfect. I mean, that's how markets behave. The whole global weakness in terms of demand is already getting discounted big time in be it global commodities or IT companies. So the worst of price action may have been behind us, but we have seen time and again that wherever the demand environment continues to be weak, even when the news flow continues, there are no triggers for the stock to really pick up. Unless, till the time you don't see growth picking up, or those catalysts of growth showing up in terms of higher order demand and all those things coming in, the stocks continue to remain in the value zone. As there's no catalyst for these companies to really outperform. So that's the worry. I mean, although the price damage may have been done, but what about catalysts? You need catalysts, growth catalysts, to really create alpha in the market, which I think will not be coming very soon, unless the US Fed pivots towards the quantitative easing from the quantitative tightening cycle, which I think will take some time. But if that comes about any time in the future, and which stimulates global growth, that will be the time for these, because these companies would have then sharply corrected also, and there will be time correction also. That will be really good time to pick up these stocks.
Okay.
But yes, the major price corrections have been done.
All right, most of the price correction is in for the IT pack. That is the word coming in. The other question I want to ask you is on the FMCG space. I know you have a lot from that basket, but we have been hearing so many concerns of how rural is not quite there yet. Demand is, still lagging significantly to what's going on in urban India. Is that a concern? And in that context, do you think this space is still good for some upside in the near future?
So what is happening in consumption is a clear dichotomy. We are seeing mass scale, wherever there is mass consumption, low-end consumption, that has been impacted. But wherever there is a bit of discretionary consumption angle, and there is some amount of value comfort. You have to remember that from last couple of years, the value as a strategy has been outperforming. Whereas very expensive stocks have been underperforming broadly. So in this consumption basket, wherever we have a valuation comfort and the discretionary consumption angle is there, I think those areas will continue to outperform. The very expensive, which are beyond one standard deviation valuation in terms of expensiveness, whereas the growth is muted. I don't think that there you would be able to see outperformance from these sectors.
Okay, all right. We will let you go on that note. Thanks a lot for joining us, Vinod, and speaking about the markets. Well, that's on the earnings, the way the markets are panned out, as well as individual stocks and sectors that he likes. As we slip into a break, there's just 24 hours to go for mutual fund visionaries like Navneet Munot, Shrikant Nadella, Nilesh Shah, Radhika Gupta, and more decode the future of the mutual fund industry. Join the conversation on Money Control Mutual Fund Summit in Mumbai on the 14th of December, 3:30 p.m. onwards.
Welcome back. You're still tuned into Trading Hour. The market continues to inch higher. So we're now around 85 points in the green for the Nifty, 90 points higher now. And we are at the high point of the day. What, in addition to PSU banks, is really sort of helping the market today is the IT pack. It has seen quite an up move in the past couple of minutes that we have been talking as well. So some of the larger names will come up for you. HCL Tech is the top IT gainer in terms of the large caps. You have Infi, TCS, all of those others doing well as well. And you also have Reliance, which is playing and, really supporting the market today. So that one is also coming up with a good gain after a couple of days of being a little bit subdued in trade. So that's what's going on with the market action. But on that note, we're going to wind down on this edition of Trading Hour. As we do that, we leave you with some important opinion. This comes in from Mahesh Patil of Aditya Birla Sun Life AMC. Thank you so much for watching. Halftime report after the short break.
We have been a bit cautious on the market here, though nothing wrong in terms of the fundamentals. I think the overall outlook on India looks fairly good. We have seen a decent amount of recovery over here. Demand has been fairly strong, and rural economy is also picking up, which is giving legs to the consumption, which was kind of weak last year. And there has been a steady pickup in the investment side also. So all in all, I think the outlook on India looks fairly strong and robust. The relative valuations where India is vis-a-vis the rest of the world, and especially the emerging markets. And to that extent, I think we've seen that recently there has been some amount of trade where money has moved into China, Korea, Taiwan, which were kind of beaten down and valuations were looking very attractive. So relatively, we've seen some outflows there from the FIS side. Overall, I think we're still fairly positive on a, say, next 2 to 3 year perspective. We see earnings growth in the region of around 13 to 15% CAGR over the next 3 years. And market should give reasonable returns from here. The banking stocks have done much better. The PSU banks have actually done even better recently because the valuations there were very, very depressed. And we've seen a very, very benign kind of a credit cost cycle. But I think the NBFCs, some of the NBFCs are now, they're still not really done as well because in a rising interest rate environment, we've seen that the banks have actually benefited in terms of NIM expansion, whereas NBFCs have seen some kind of a NIM compression. But as the asset side also kind of rebalances, right, the rates over there, I think we should see the margins on NBFCs starting to improve in the next, probably the first quarter of next fiscal year. So I think some of the NBFCs are now looking at fairly reasonable valuation.